Topic 1. Keir Starmer's Labour Party secures a landslide victory in the 2024 UK elections, indicating a significant political shift to the left in Britain. The Labour Party in the UK has won an election for the first time in 14 years, defeating the Conservative Party. The new centrist-left government is expected to revive the economy and address public service issues. Newly elected Prime Minister Keir Starmer prioritizes economic growth, aiming to achieve it through increased public investment, industrial strategy overhaul, and policy reforms. However, with government debt exceeding GDP and sluggish economic growth, tax increases or spending cuts seem inevitable. The Labour Party also seeks to mitigate economic losses from Brexit by improving relations with the EU. Topic 2. Saks Fifth Avenue's parent company, Hudson's Bay Company, plans to acquire Neiman Marcus Group, potentially reshaping the luxury retail sector. HBC, the parent company of Saks Fifth Avenue, announced the acquisition of Neiman Marcus Group for $2.65 billion. This deal will create a new luxury department store empire called Saks Global, which will include Saks Fifth Avenue, Saks Off Fifth, Neiman Marcus, and Bergdorf Goodman. The merger comes as traditional brick-and-mortar retail struggles with the rise of e-commerce and increased consumer demand for experiences post-pandemic. The deal also presents an opportunity to redefine customer experience through technological advancements. Mark Metrick, CEO of Saks.com, will become the CEO of the new Saks Global, with Amazon and Salesforce collaborating as minority stakeholders in technology, logistics, and AI integration. The merger is part of efforts to adapt to changes in the luxury retail sector and attract younger shoppers. Topic 3. China enhances its economic and financial sectors with a new 30 billion yuan fund for SOEs and stricter capital market fraud prevention measures. The Chinese government has launched a special 30 billion yuan fund to activate the land assets of state-owned enterprises, SOEs, and released comprehensive guidelines to punish and prevent financial fraud in the capital market. These guidelines include strict penalties for financial fraud, enhanced investor protection, and measures to encourage relevant parties to detect and prevent fraudulent activities. Issued by the China Securities Regulatory Commission and other central departments, the guidelines propose new measures to prevent financial fraud, clarify legal responsibilities for third parties involved in fraud, and strengthen the application of special representative litigation systems for securities disputes to facilitate compensation for investor losses through class action lawsuits. The guidelines are expected to promote high-quality development of China's capital market and attract long-term investors. Topic 4. U.S. employers add 206,000 jobs in June, reflecting a resilient labor market amidst economic growth. According to the U.S. employment report for June, the economy added 206,000 new jobs, a slight decrease from the previous month. The unemployment rate rose to 4.1% for the first time in 2 years, as 277,000 people started looking for work, but not all found jobs immediately. The average hourly wage increase rate is 3.9% year over year, which is welcome news for the Federal Reserve in its efforts to curb inflation. Although the U.S. economy continues to grow, the pace has slowed due to the Federal Reserve's high interest rate policy. Nevertheless, the job market remains strong, with most workers maintaining relatively stable employment. The Fed has raised interest rates 11 times over 2022 and 2023 to bring inflation down to its 2% target. Inflation has decreased to 3.3% from a peak of 9.1% in 2022. The Fed is expected to cut rates only after confirming a consistent decline in inflation. Topic 5. World stocks hit a record high, with a focus on U.S. employment data and UK political changes. U.S. and global markets started by assessing the cooling of the labor market following the U.S. Independence Day holiday. UK markets saw an uptick